Good morning, traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for January 3rd, 2025. Hope everyone had a great evening, great afternoon, ready for another wild and crazy day in the market. Let's take a look at what happened overnight. Well, my goodness. We have China continuing to show major economic weakness, and everyone should wake up to the fact that there is a big structural problem going on over there. And I really kind of want to caution everyone to keep an eye on that, because we could easily see China really start to break some major technical areas and cause additional pressures around the world. As of last night, they're saying they're going to cut rates again. They've been providing tons and tons of liquidity. It is not resolving their problems over there, and the banks are not doing the job of lending because they're not sure they're going to get their money back, creating a pretty substantial financial risk over there. So just keep that in mind. Right now, Shanghai last night had a rough night, down 1.57%. Hong Kong managed to pull out a gain yesterday of 0.70%. South Korea, despite the political turmoil over there, they were able to pull out a bullish move on the day. India was down, the Nikkei was down, and Australia was up. So kind of a mix last night in those Asian markets. If we take a look at European markets this morning, well, we're bearish across the board, with the DAX down 0.37%, the FTSE is down 0.19%, and the CAC is down 0.81%. The auto sales are falling pretty hard, and unfortunately, their unemployment rate ticked up to a full 6%. So not looking so good over there in Europe, as well as we continue to see their economy slow. Let's take a look at what's happening here in the U.S. First off, we've got the Dow looking bullish this morning, up 54 points at the moment. S&P 500 futures up 1275, and the NASDAQ futures are up 79.75 this morning, trying to push back off of yesterday's kind of rough start to the year. Let's take a look at what we've got going on in oil. Now, oil was moving up yesterday, and oil is continuing to show a little tiny bit of bullishness early this morning, but now slipping just slightly negative. Right now, oil futures are down 22 cents at 72.90 a barrel. Brent crude is at 75.68, down 25 cents a barrel. And natural gas that tried to make a move higher yesterday, well, that ended up fading back, and now we're seeing a gap lower this morning by about 14 cents. So coming back into some support here on UNG. If we take a look at our precious metals here this morning, well, precious metals had a really good day yesterday, ending up over $30 higher in gold. And this morning we've got gold up. Gold futures right now are up $3.60 an ounce. Silver futures are also higher here this morning. Let's see, exactly 32.5 cents here on silver futures this morning, trying to move higher. Copper is actually a little bit higher this morning. It struggled yesterday to hold on to some gains, but trying to move just a tiny bit higher. Platinum and palladium are also higher this morning. And then if we take a look at cryptos, we've got those cryptos. They had a great day yesterday, pushing to the upside, but right now we've got Bitcoin pulling back a little bit, $817 a coin. and Ether is also down $2.08 a coin. So you want to keep an eye on that, kind of a mix in here on those cryptos this morning after a big run yesterday. So what does all that mean for the day? Well, before I finish that up, we probably ought to take a look at those bonds. Bonds are not giving us any favors here right now. The 2-year bonds are at 4.24%, continuing to show that pressure in bonds. Obviously, that had a major impact on mortgage applications yesterday as those bond yields continue to go up and mortgage rates are pushing 7% again. We have the 10-year pushing up at 4.55% and the 30-year at 4.76%. And the reason this is so important here, everyone, is the bond market is completely disagreeing with the Fed. The Fed is cutting rates, and yet our rates, ever since they started to cut, our interest rates are going up because there is some concern and worry about economic issues that they're seeing in other places in the world, possibly some worry on inflation, possibly some worry about tariffs and the next administration, how that may be impactful to these other countries. So we're going to have to watch that pretty closely here, and we're continuing to see those bonds disagreeing with the overall bullishness of the market. So we're going to have to pay attention to that. Let's take a look. I guess that's it. Let's settle in. Let's buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, and thank you so much. I hope everyone's having a great morning. Really big cold snap going on here. They say Tuesday night we're going to be 2 below now. We went from Christmas Day, I was outside in a t-shirt, and big changes here in weather. I hope you're warm where you are. Let's take a look at these index charts and see if we can gain a little bit of information about how we might want to approach the market for the day. Remember, everyone, we want to look at these charts for what they are, not for what we want them to be. And that is a good topic to be thinking about here this morning, because remember yesterday we were pumping big time to the upside, and yet I still looked at that possibility of what happens if the bears have something to say on the day, and well, it did. So remember, we have to really look at these charts, and I think particularly so in the environment that we're in right now, because we don't have particularly bullish patterns in the chart. As a matter of fact, there's some really concerning patterns, and we need to be more diligent and not so reactive in considering that that fear of missing out, chasing thing probably hurt a lot of folks yesterday trying to dive into the market first thing in the morning. So make sure you're taking a good look at these charts and paying close attention to the patterns. So first off, here in the diamonds, we continue with this head and shoulders type pattern in the chart. We have the neckline of that head and shoulders right in here. Yesterday, we came back down and we tested that low. We held it, but we tested that low. So officially, we have not yet made this lower low, creating the official downtrend here in the chart. We've made the lower high. We need the lower low to confirm this downtrend here in the chart. So we want to be thinking about that. Although we're trying to get a little bit of bullishness here this morning, just kind of keep in mind, if we find any reason for bearishness, we'll want to be watching this area right in here. A breakdown through here and a close below this area confirms are a diamond's downtrend. We'll want to be paying attention to that. If the bulls, however, find inspiration on the day, then you can see pretty easily we've got some resistance right in here in the chart that we're going to have to deal with. And of course, yesterday's high would be the next area to try and breach back up through there as we start trying to travel back up toward this area of price resistance. Remember, we do not have any kind of an upside trend here in the diamonds until we can somehow put in a higher low in that chart, whether that be underneath that resistance, whether that be up above this resistance. There is no upside trend right now in the diamonds. If we take a look at our SPY, we have a very similar situation, but we have a flat. Instead of that leaning head and shoulders, we have a flat head and shoulders with the neckline setting right here on this support. So I'm going to say this is a stronger pattern here overall, but we still have that concern in this pattern because we made that lower high. And yesterday, if you take a close look, we took out this support. Now, we did bounce off of that area, but we actually made a new low. So we'll have to see. It's going to be critical how this follow through here is on that bounce yesterday. If the bears were to find inspiration, we can easily see that breaking down into this area would cause some worry and concern in that possibility that that breaks. And if that breaks, I'm looking at a possible gap fill here in the chart of the SPY. So watch that carefully. Now, if the bulls continue to find that inspiration, again, follow through is going to be really important here. Can we push up through this area of resistance in the chart and then start building in a little bit of bullishness? Once again, remember, there is no upside trend here. We've got a W bottom or a double bottom formation in here, but we need to create some kind of a higher low before we can say that trend is resuming to the upside, and we need to get out from underneath that downtrending pattern that is showing up. Confirmation of the downtrend would be a close down below these areas of support that we, bounced off yesterday, so watch that closely. If we take a look at our QQQ is probably in the best position of the indexes out here, and of course there's tremendous hype on tech stocks. I am worried that our tech stocks are a little bit overvalued. We'll see how that goes when we come into earnings, but watch that carefully with this lower high here in the QQQ. That is a bit of a problem, and you'll notice that we did make a lower low yesterday. So we are officially showing that downtrending pattern here in the chart. Now, we did bounce off of that move, which means follow through here is going to be extremely important as well. If those bears continue to find inspiration here in the market today, then pushing back down below this level and a close down here would raise some significant concerns, I think, in the market and really cement that potential downtrending situation here in the Qs. If the bulls, however, can find inspiration on the day, well, we can see the resistance that we need to attack and break. If we can break back up through there, we might start lifting this back up here and coming back up to attack this downtrend in the chart. Now, unfortunately, any rally up into here just sets up the next opportunity for a short, unless we can actually put in that higher low to resume that upside trend. So we'll want to watch that pretty closely here in the NASDAQ as well. And then if we take a look at IWM, well, IWM has that similar pattern to the diamonds. It's a little bit funky with that watershed type head right that we had in here, but you'll notice we haven't been able to get anything really going here in this chart to the upside. We've got a little bit of a downtrend here and a downtrend right in here, and this consolidation here is starting to look like a short pattern to me. We'll want to watch that closely. Now, the neckline of this is right down through here, and a break of that neckline, of course, would be confirmation of the head and shoulders pattern. But to confirm the downtrend, all we really need to do is break down below these lows. So watch that carefully. If the bears were to find any inspiration today and push down into here, well, that's going to be a problem for us, and we'll want to watch that pretty closely. Now, the IWM was the only index yesterday that was able to squeak out a tiny gain in the market, but I don't think that really changes this pattern here at all, and that possibility that we could slip on over to the downside. Remember, we're underneath these upside trends. It's not looking too favorable here at the moment for IWM. But if those bulls can find inspiration here today, then we need to start breaking back up through some of these dark candles here, pushing up into this area of resistance in the chart and see if we can break back through that trend that we broke here over on this day. So watch that carefully here in IWM. If we take a look at our VIX here in the market, our VIX saw a little bit of increase yesterday, but we did ease back after we bounced in the afternoon, pushing that back up. I think there is just so many things that the market is trying to deal with. We've got a debt ceiling problem that's going to be coming up somewhere between the 14th and the 20th, where they're going to have to do extraordinary measures. So Congress is going to have to get on task with that. We've got, of course, a new administration coming in with lots of things. We've got our blackout period going on in the market. We will not begin our earnings season until the 15th of this month. So we have a lot of uncertainty for us to deal with here in the market. And I think there's a pretty good chance we could kind of see us languish here just a bit with declining market breadth. So watch that closely. And that does give us a little bit of concern here in the market, that we could see that fear creep on higher. Now, if fear does continue to push up, well, we can see if we break through some of these areas in the chart, then we've got that big upside move that could come in fear. But watch that carefully. We are making higher lows in the VIX, and that is a concern. Now, if the bulls can find inspiration today, perhaps we continue this consolidation, or perhaps we can start pulling back toward this trend. But we need to break this down for those bulls to show, hey, we're no longer concerned or don't have a fear in the market. And I think that may be a little bit of a stretch with the kind of issues that we are seeing around the world right now. If we take a look at our T21-22, the T20s, we had a good surge up yesterday when we were up over 300 points. We saw T21-22 up in here around 70%. So it really stretched quick in the morning yesterday and then ended up reversing and coming back. So if we look at T21-22, the 4-week new high, new low ratio, if those bulls find inspiration and continue to follow through this morning, then we certainly have lots of upside opportunity for them to participate in that move to the upside. If the bears were to find inspiration, we did open up an opportunity for some more pullback if those bears were to become inspired by anything in the data today. So watch that carefully. Now, if we take a look at our T2108, unfortunately, our T2108 made a nice little move up yesterday, but faded it back pretty substantially. We finished with only about 21.5% of the stocks holding above their 40-day moving average. Doesn't really make a good bullish, warm and fuzzy feeling, but it is kind of a W bottom formation or double bottom formation. And if we can find that bullish inspiration, maybe we can start moving up and attacking some of these resistance areas. If the bears were to have anything to say and breaking down below there, I would watch for that fear to maybe come up if we start seeing that happen here on a Friday. If we take a look at T2107, our T2107, the percentage of stocks above the 200-day moving average, also tried to make a move to the upside early in the day, but that ended up fading back. 43.5% of the stocks holding above their 200-day moving average, and you can see we've got that same situation here where we could attack up here if we can get those bulls going. We could easily attack down here if we get those bears going here today on some data point. So watch that carefully, not getting a whole lot of energy. And another one of the major issues in here is we did not see breadth follow that move yesterday. I've talked about that just a little bit. If we don't see this breadth picking up on the bullish wave, that is a bit of a problem. Now, I will say at the end of the day, when we rallied back, we started to hook this over just a little bit. So perhaps today we can get some follow through on breadth to the upside. So watch that carefully in here. But if we get this bullish move again today and continue to see breadth falling, and one of the reasons that can be the case is so many companies are in their blackout period. They are not allowed to do corporate buybacks or anything like that. That usually has that breadth struggling in here to find any kind of momentum. So watch that carefully here. We're really down to the economic calendar because there isn't anything on the earnings calendar today to provide that inspiration for the market. So that being said, let's take a look at that calendar here this morning, our economic calendar. Sorry, I didn't have this size. Give me a second. One of these days, I'll remember how I do all of this after taking some time off. So I apologize. If we take a look here, we've got this morning we're going to have those motor vehicle sales. Kind of keep an eye on that. They've already come in. No, they haven't come in just yet. They're looking for 16.5 million to stay flat with last time. Watch that closely. We've got an ISM, probably our most notable report here for today. They're looking for a 48.5. That would be a 1/10 increase on that. This one worries me a little bit that we could actually see that decline a little bit, but watch that closely. And then we've got a natural gas report, a Baker Hughes rig count, a Fed balance sheet, and some Fed speakers in here today. So kind of keep an eye on that. And when it comes to the earnings calendar, guys, there is nothing. We have no earnings reports to speak of, nothing to provide inspiration to the market. And as a matter of fact, it's going to be pretty lean on that economic calendar all the way up to the 15th of this month, where we'll start with the big bank reports. Let's take a look at some stocks that could be setting up for today. And remember, everyone, before we do that, if you could do me that quick favor by clicking that subscribe button on YouTube and also clicking that bell icon so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could please do me that favor and click that thumbs up button, leave a brief comment. I know it's kind of a bummer of what I'm talking about here today and the concerns and the issues that I see out there. But remember, guys, if we don't recognize, if we don't see these patterns, if we trade with this fear of missing out energy and wild-eyed gambling mentality that we've kind of seen over the last couple of years, it's worked really well. Don't get me wrong. It's worked really well for folks. But at the same time, you could lose that money really quick if you don't pay attention to the issues that we're starting to see in these charts. So keep a close eye on those charts. So let's take a look at some of these stocks that could be setting up. And remember, everyone, these are not recommendations to buy or sell any security. You need to do your own due diligence. Be very, very careful in this market. And remember that anything is possible. Now let's take a look. TTWO. Now, although it's just been kind of languishing here, drifting along sideways, TTWO, nice little wedging pattern. In fact, there's a lot of these wedging patterns, symmetrical triangle patterns in the market right now. But TTWO holding up pretty well, looking pretty good in here. That possibility, if we can find some bullish energy in here, that just might pop out of here and get something going here on take two. I understand they have a new game coming out that they're expecting to sell really strong. So watch that closely. TWLO is another one. Same kind of pattern in here. Very different company, but as you can see, another wedging pattern in here. Setting up and holding on this support area here. I would watch that closely for that possibility that could move on through to the upside. I had mentioned Cisco yesterday, and I still like the way Cisco is looking in here. At least it's holding on to support here in the chart. It's not really getting any big energy to the upside, but I do think that's worth keeping an eye on. Now, when we take a look at some of the big techs, boy, Apple had a rough day yesterday. You probably heard they have agreed to a settlement of like $95 million or something like that to iPhone owners because Siri has been listening to people's conversations. So we'll want to be watching this carefully. Breaking this support in here is a critical problem. I think any rally back now, guys, any rally back in Apple, we could set up that little head and shoulders up here in Apple. So watch that carefully on that. Remember, it's not going to report until February, so we've got a ways to go here on Apple. Watch that careful. Now, there are stocks I did see coming up off of bottoms. Micron trying to pop up off of this support. Now, if you want to speculate a little bit, something like this with a bull put credit spread or something like that might be the thing to be considering here if you think Micron's going to hold this big area of price support. Little W formation starting to show up in there, double bottom. So watch that carefully. We pop through. Let's see how that follows through here today. But Micron may be something to pay attention to. Meta held up really strongly yesterday. And again, we have this double formation in here, this double bottom pattern in here. So watch that closely. If we can get back above this area of price resistance and prove to hold, well, there's that higher low, and that puts potential for resuming that upside trend. Until that higher low comes in, though, guys, we really have to consider the fact that we did make lower highs in here. If we can't punch through there and make some of those bullish patterns happen, we still have that potential on some kind of a bearish wave in the market that could fail. So watch that closely. Now, Google on their all of the energy that they created in here based on their quantum computing. Still trying to hold in here, but this is also a little bit of a concerning pattern here. We're running, we're just not getting the momentum in here. So watch this closely. If this were to fail in here, we could start moving this back down pretty quickly. Watch that carefully in Google. Let's take a look at another area of the market. Let's take a look at financials. If we take a look at XLF tried to break this downtrend in here, as you can see, popped up through there, came into this resistance, and then showed some additional bearishness. Yesterday was not the best day here for it. So perhaps this trend has come up into here. Again, there's that little symmetrical triangle formation. I would watch that closely. This could go either direction pretty easily. We need to break this resistance in the chart for this to turn back to the bullish side at all. This could easily slip off of this edge and move lower. And if we take a look at our regional banks, we're seeing that same kind of problem in here with that funky head and shoulders type pattern starting to show itself with what I call a pop out of the box pattern. This is a nice tight consolidation. We're coming up underneath that trend. If we get any kind of bearishness to fall through, this is a pretty easy potential short pattern with your stop coming up above here. falling off of that edge could occur pretty quickly. So watch carefully in some of those regionals. We're also seeing a little bit of pressure here in some of our the retail stocks. Obviously Costco really coming down hard. There's that lower high that I was talking about. We rally up, hit that lower high, bang our head into resistance in the chart, and then we see some more selling. Any rally or consolidation, if we consolidate over or if we rally back, I would be watching for that next opportunity for a potential short there. Walmart is one of those that's in that concerning area right now, as you can see, where we kind of topped out here, created that lower high. Now we're down here testing this little area of support. Any kind of bearishness comes in here, we could slip off of that edge as well. Watch that pretty closely. Now I do think there is one retailer, and I mentioned it yesterday, with Target trying to come back up. Now this has been a very, very beat down stock. We've been struggling in this area for a long time, but Target putting in this bullish little upside trend in here. We're testing and banging our head against this resistance in the chart. I'd watch that carefully. If those buyers can find some kind of inspiration and pop in through here, well, notice we've got a pretty good sized gap that could be filled if that starts coming around. So watch that carefully. So Pinterest. Pins had a really good pop up there yesterday. I am breaking this downtrend here in the chart, so perhaps if this can hold this higher low in here, we may have an opportunity coming back around in Pinterest. I saw Etsy was trying to get something going there yesterday, but it ended up faded back, and notice that we've given up this trend and obviously that trend some time ago, breaking down through these support levels, testing this resistance up in here. I see that potential that Etsy could roll on over. And of course, we're seeing that in things like FedEx. FedEx making that short pattern occur here yesterday. FedEx, UPS doing the same. So be really careful here, guys. There's a lot of short stocks starting to show up, short patterns that are starting to develop. So be prepared for that possibility. I run this video a little bit long. I hope it was helpful today. I want to wish you all of the very, very best. Be careful, be safe. I'll see you right back here, bright and early Monday morning. Have a good one, everyone.